Hey everyone, I've had a request to make a video on how to average into a short. Um, Averaging into a short isn't really any different than averaging into a long, other than you have the chart up one way versus the other. Um, but the basic principles of averaging into any position is that there's certain areas where price will go to and certain areas where price will reject from, and averaging in at things in between those areas is, generally speaking, just a waste of money. It's not going to help your position long term. It's not going to help your risk reward. So I've picked a particular short that we did quite some time ago, but it was a nasty short, because a lot of people, including myself, are actually just questioning, when is this going to go down? Like, when is this going to stop? It's just living up here, and it hasn't reversed. So I figure this is probably a good one to actually show people, because often when they're thinking about averaging into positions, they're doing it because they're underwater. So the trade plan is quite simple. We want to short this whole candle, and that means that we could enter at 167.9. We could sit back and we could watch for trends, and we could TP at the trends, and we could just put our blinders on and forget all the other stuff that's happening. But if we wanted some areas to actually average into that trade, let's say it goes past our entry, well, then we need to look for weekly areas of rejection. So back here, older area in time, we had a range, which obviously was very good support a couple of times, but it's been broken now and hard closed by all these candles down here. So that would be an area for retest. So not only is it an area that price is going to be targeted to go and hit, but it's also an area of rejection on retest, first touch rejection. So now you've actually got two areas. You've got this 167.9 and you've got this 176.4, which are both areas that could reject price, and they both exist within the realms of the base of the whole candle and the break level. So these are two areas. Now the next area of interest would be the break level, because if you had the break level, you're going to do one of two things. You're going to close above it, and then you're going to retest the top side of it and potentially just go up, in which case your trade's invalid. You should probably just look at getting out. The other side of it is that you pull back down under it, close under it, and then it can become a form of rejection, and then you could look to actually average in. And the other thing to consider too is that down here we've got a weekly range trend. So if we don't retest this weekly range trend on the next couple of candles, then it could also be a target for the short, as well as what will tend to happen is that the candle will stay up here for longer. It'll close in accumulation, and it will probably create a range trend. And then if it closes on the underside of that range trend, that could be another area of adding to your position to bring your short down. So those are all the kind of things you would consider as far as where would I add up inside here. And then what you got to do is you got to track the progress of the price. So because trends might move. So first we'll just play it forward a little bit. Okay, so first thing we just need to acknowledge here is that we haven't retested the range trend, so it's a target, for the future. And let's see what else happens. None of that really means all that much. Okay, nothing much moves. Okay, so we're back up above that interior support trend. So this interior support trend is not technically broken by this one, because this one was a dive of the exterior. None of these have broken it. So what you've got to consider now is that we would want to take a TP at this trend regardless of when it hits it. So if it spends too much time up here, that might mean that you're taking a TP above your initial entry and de-risking your position. It all depends on how much time it spends up here, but that trend would certainly be something that's going to try and fight this hold level, this break level, and send the price upwards. So these are things you would consider. Okay, so far we could enter here with our lazy entry. We could very much assume that depending on how this candle closes, these upper levels are going to be tested, because if that closes right now, it's a break of this downtrend, but it hasn't tested the hold level, so the hold level becomes the target. If that goes up into that hold level and then closes, then the targets actually become these higher levels. So it all comes down to what happens on this next candle as to whether this is even a smart entry or whether you should just be entering up here. So, well, it hit the hold level and it closed. So as of this very moment, entering on that level is absolutely too early. And you might have already done it because you might have had a limit order sitting there. But realistically, sometimes it's better to actually see these things and trade them in real time without the limit orders. So because that candle is up inside that hold level, it's going to create a range trend wherever it closes. So that could be anywhere at this stage. It's there, but it depends where it closes. The target for the lower trend break is no longer this entry. It's going to be something higher up. It's probably going to go for the break level. You may even just not take the short anymore. Or if you are going to take the short, you're going to take it based on this range back here, or you're going to take it based on the range trend, or you're going to take it based on the break level. So, and if you're already in the position, you are now underwater, right? So that's where we go from here. Keep pushing up. So we're back inside that range. So this can get really bad. If it closes up inside that range, it can go, and then the top of that range is up here somewhere. So, this is, okay, we've hit the break level even. So we haven't even closed the candle yet. We've already hit the break level of the range. Okay, we close the candle. Now, what happens when we close the candle is we create that range trend. So if you're going to add or average to your position, you would average it on the test of this range trend, which is what happened right here. And because you have already broken the break level, you should look for exiting on your most conservative exit to be safe, which would be this trend right here. Now, this break level, this range trend, what they want to target is they want to target here. They want to target the retest of the untested. So this did not test the range trend, so they want to retest down here. Okay, but you don't know that that's going to happen, particularly because you've got that support trend coming up there. So if you're in this trade and you've hit the break level, you've got to consider just ensuring that you do not get nuked. And really, it's about taking conservative profits if you want to last a long time in this game. So if you'd entered on the lazy entry and you'd averaged on the weekly range, maybe you're still a little bit below your average entry now. If you'd added on the retest of the range trend, then you'd probably be about break even at this point, maybe a little bit in profit. In which case, the first thing you should do is you should de-risk your entire position back to the original amount that you were allocating to the trade. So you're out of, say it was 1%, 1%, 1%, whatever. You would de-risk back to 1% and you would aim for the conservative target. And you'd get really scared because it keeps going up. Okay, if it closes above this range trend, it's going to absolutely moon, but it's all about how it closes. And luckily it pulls back down and rejects. It does what it should. Pushes back up, boom, down. Okay, and you TP at the trend. Now, the trend is going to try and push the price up again, and there's going to be this fight that goes on in here, but you're done, you're out of your trade, you made money. Okay, and that's because you averaged in at the important points based on how structure actually formed. And the structure, you can't tell when you're just looking at this candle because it hasn't happened yet, right? So you've got to sort of manage the trade, average at the right areas, and take conservative profits. And if you want to re-enter this trade, you would then treat it as a different trade. You'd say, well, if I lose this trend, if I retest this hold, this new hold, then it would be a whole nother trade idea. And the fact that you've rejected off the range trend up here, you would have some new targets, which would be this 247 and this range trend all the way down here, but you'd treat it as a totally different trade, right? Having already escaped this one, luckily, and because this could have gone completely the other way. All it would have taken was one close up above that trend, and it would have been that level as a target. Okay, so yeah, that's how you manage a trade, and you sort of average in at the right points based on structure. And yeah, anything between those points, just there's no point adding. And that's kind of what we see a lot with traders is they see the price goes up $3, so they add some, and the price goes up another $3 and they add some, whereas really maybe the next price that they needed to add was going to be $10 up, and everything in between those two numbers was just a fake sort of feeling of, oh, it's reversing now. There's just certain areas where price can react to, and certain areas where it just doesn't make a difference. It's all just noise. So and incidentally, if you had kept this open and played it out, it would have gone up again, scared you, not made that hold level, made that hold level instead, lost the trend, and so it ended up turning the break level into an origin level, and I think it ended up going down and hitting the hold, creating the long, hitting the range trend, going up. So I mean, it all played out, but the fact is that you don't know that, and yeah, you're just better to take the greediest entries, take the conservative profits, average at the right points, get out of the trade if the plan becomes invalidated. And the moment something like a break level is invalidated, or the moment a break level is hit, you should consider the trade as invalidated. So yeah, hopefully that helps a little bit. And yeah, jump in the Discord if you want and ask a few more specific questions if there are any. And yeah, like, subscribe, and all that stuff. Cheers, bye.